Donald Trump is moving to roll back President Barack Obama's environmental and energy policies and allow unfettered oil production across the US. Malcolm Graham-Wood joins us now from HydroCarbon Capital. Environmental issues aside, and we'll get into the corporate implications in just a minute, but how is Donald Trump going to make this sort of oil production viable at sub $50 a barrel?
I don't think he worries too much about the price as such. I mean, his policy is clearly defined into two areas. One is domestic and one is international. And on the domestic level, he has pledged to make drilling, fracking and transporting oil easier and cheaper. So there won't be any problem on environmental permits to drill or to frack. And very importantly, is one or two of these pipelines, which is what you were talking about being held back by Obama. And in particular, we're talking about the Dakota Access Pipeline and the Keystone Pipeline, where they are, at the moment, in some cases, shipping a lot of crude by rail, which costs $25 a barrel, and they could be shipping it by pipeline, which costs $5 to $10 a barrel. And in those cases, provided the local area people work with them, and I think they will.
How long will it take to get those pipelines up and running?
Well, most of the pipelines are actually already built. In one or two cases, they're only in really sensitive small bits of it. So actually, to be honest, there's a substantial pipeline network in place, and they're just talking about putting in what has been the most difficult things, which has been where Obama has been able to block it. So, in those areas, I think he'll move on, and that means that there'll probably be more oil rather than less.
This is going to allow more money to go into the back-end player, isn't it? I suppose the shale
North
gas.
Dakota is your obvious area where it's been over the last 10 or 15 years. It's been a massive move into North Dakota, but that's the area which hasn't got the pipeline connection yet, and which is railroad stuff at the moment. But it will be everywhere. I mean, obviously, plays in Texas and so on already have the infrastructure, and it's also moving oil down from the most difficult parts like North Dakota all the way down to the Gulf Coast. Don't forget Houston and the Gulf of Mexico is where there's a huge amount of refining capacity and export facilities. So,
So what's this going to do to the price of oil? I mean, because in addition to this, he's also wanting to go back underground to dig coal out where it's still available. So that presumably is going to have another dynamic on the price of oil. Yeah,
I mean, my guess is that freeing it up will make it cheaper, I should think, because the costs are coming down. So it means that you can actually drill for more, and instead of being, you need $50 to $55 to make it work, you might start find that 35 to 40. But I think that's quite sort of small beer in its own right at the moment. The coal thing is quite interesting, but of course, coal, has been, coming down very, very sharply recently because of climate change, and coal is where, the competition for coal is natural gas, effectively, for power generation. So what you might see is a bit of a squeeze on natural gas. I don't see it myself very much at the moment, but I would imagine that there were one or two states where, coal is a very big player and still is. So I would expect to see, some sort of movement, some resuscitation in the coal business in the States. He's no fan of wind or to a certain extent solar.
Any of the renewables, indeed. Yeah. Let's move the focus away from the domestic US market now to the international market, because we're hearing a lot more friendly chat going to and from the Kremlin to Donald Trump. How is that going to change things? And of course also the Middle East with relationship to Trump.
I mean, I think it could change things quite a lot. To sort out Syria first of all. I mean, he tends to be seen as a friend of Putin in the sense that he is very specifically anti-ISIS and 1-2 terrorist groups, but I happen to think isn't such a bad idea. Now, if that means that he has to support Assad like the Russians are doing in order to get rid of ISIS, that may well be happening, and I suspect that's the nature of one of the two of the discussions between the Trump people and Putin's men. Apart from that, of course, we have a whole situation in the Middle East where, first of all, he said that overall, if you want to be a friend of ours, you can be, but this is what you tick off on the trade boxes. And so, people who sell oil to the States will be thinking very carefully about their trade positions. And secondly,
such as
well, Saudi Arabia, for example.
Okay.
The Saudi Arabian relationship with America has been pretty poor by long-term standards under Obama, and he had no truck with the Saudis as such. He did what he could with them, but he didn't roll out to them. That the Saudis may think that that's an opportunity to do that, and so that they might reach out to Trump. Don't forget the other thing is Iran, where Trump is deemed to be anti-Iran, and he said he would put the sanctions back on if he had a chance. I think that's very difficult to do in the way the sanctions were lifted and so on. But Iran should be concerned that he's on the warpath in that sense. So one or two of the relationships that America have in the Middle East are up for grabs, no doubt about it. And I think that you could easily see things changing. And don't forget, we had a bad number from the EIA on inventory figures this week, and that was because America increased by 900,000 barrels their imports. And so, there'll be people wanting to be players with America, and it is all up for grabs.
But briefly, let's just bring the price of oil into this. We're currently 47 for Brent at the moment. I want to talk about the corporate in just a moment and the implications of this. But what about the price of oil? You've still got a $60 a barrel target, I know, or thereabouts the end of the year. Yeah. What are these sort of policies going to do to the price of a barrel?
Well, they could bring them down. If, for example, the domestic situation changed that much that the cost of production came down. There's no doubt about that at all. My $60 has been in place, for more than 6 months now. I don't change it very much if something dramatic happens. We haven't seen what Trump is going to do yet, so we're no further to actually, I'm certainly not going to change my oil price for the end of this year, only 6 weeks away, on the back of, we don't even know who the energy secretary is going to be. And if it's Harold Hamm who runs an independent company, it's anybody's guess. But the bottom line is that we will see more domestic production from the US. I don't think it's going to make a lot. I think that the bigger difference would probably be internationally at the moment, and he could, by doing some sanctions on Iran or changing things, he could shift the gauge a little bit. I wouldn't say I'm going to move dramatically at the moment.
So, corporate. BP recently said the rise in the oil price has hit its refining business, but the rise in the oil price obviously helps its production. These large oil companies, BP, Shell included, they've got a yield of something like 7%, I think their dividend payments are at the moment.
Yeah.
They can't surely sustain these at these sort of levels of prices. Prices have got to rise substantially, haven't they, to see investors paid that sort of rate?
I don't think so. I'm been a believer that they will continue to pay these dividends for the foreseeable future. The last set of results, the two UK majors both said, fundamentally, they both thought that $50 to $55 was a price at which they could certainly continue to rebuild the balance sheet. They've been cutting capex and pay the dividends. I think that the difficulty is if you had a really bad OPEC meeting and the oil price came down, one or two of these companies are looking for an excuse to cut the dividend. So if, for example, Saudis went to Plan B and said, right, we're producing 13 million barrels a day until one or two of you guys decide to call it a day, I think, Shell or BP could say, right, that is no longer 50 to 55. I think we're talking 30. And at 30, even the holders of, But the point is, you could halve that dividend. Yeah. And still be a pretty good dividend. So
Okay, all to be seen. But thanks indeed for joining us. That's Malcolm Graham Wood from HydroCarbon Capital, looking into the crystal ball and to see what Donald Trump might bring to the table with regard to his energy policy.